the conviction that you can build to actually hit the bid, to make the trade, combine these things with volume weighted average price, you'll be a very successful day trader. But these are the places that you need to look. The book is called Stocks by the Numbers, and it was written by Grant Henning. And then his son did analysis of, he took 25 different indicators, and then he effectively looked for any level of cooperation between them. And what he found was earnings per share doesn't matter. What he found was if you're in the world of momentum and technical trading, the four things that matter, I think ULT is on this list as well. It might be 5. But the relationship between RSI, MFI, MACD, and ADX. And if you just follow those things as a day trader and you focus on the 1 minute, 3 minute, 5 minute, and you take risk down here where things are oversold for the day, big sell-off to start, well, look, oversold, negative, switch over on the MACD. Here is the positive move on the ADX. The thing that I want to stress about this, it may not work, right? Sometimes it may not work, but when you have these oversold conditions in a short period of time, that can be where you have conviction. That can be where you say, okay, it can't get any worse than this. Well, all you have to do is try to buy here and set your stop. And then look at what happens. This thing screams up to 10, and then it sells off. Well, that makes sense. Overbought. Here's your negative move on the MACD. Here's your negative crossover on the ADX. Well, if you bought here and you sold here, right? Here's 1780. Here's 1810. Yeah, you could have sold up here. Fine. Okay, whatever. But if you just pay very close attention to these 4 indicators, I assure you what matters most, you're going to build conviction. And all of these work together. Positive move over, negative, just rips the rest of the day. These are the only 4 things you have to watch. I hate to say that. It sounds like, oh yeah, just do these 4 things. Oh no, but the conviction that you can build to actually hit the bid, to make the trade, combine these things with volume weighted average price, you'll be a very successful day trader. And the worst scenario is you're going to lose 1%, right? Because that's where my focus is on the SQQQ and the TQQQ. I want to make 1% a day if I can. And I'm willing to lose 1%. If I can make 2%, even better. But these are the places that you need to look. And once again, I'm not going to be in a room all day doing this. I'm just not. This is not what I do. I can be coaxed into doing it, or I could get somebody who can come in and just do it for me. But I want you to be aware. This is where you can build conviction. Follow the SQQQ. Now let's flip it over real quick and let's look at the TQs and look at what happened here. Well, once again, here you are, 12 o'clock today. Oversold, positive switch. Well, if you bought here at 41.31, you got about almost a 1% move on the TQs. It's magic, people. It's not that complicated. The thing that you are looking for as a trader, as a day trader, as an investor is conviction. And this is conviction. These 4 things, when you combine the 4 of them, can give you that confidence and say, if I can win 8 out of 10 times, if I can make a 1% 8 out of 10 times, well, now suddenly what will happen is you go to the long-term duration of this, you don't need options. You just need to know, now's the time to bid on this. Buy for $1, sell for $2. Buy for 41, sell for 42. And once again, remember, this is your natural stop out too, because here's oversold. You can re-enter later. Just throw the 3-minute chart up. Hit the bid. Make the play. And it's not just TQQ, it's anything. It could be Exxon for all I care. Exxon, huge sell-off today, right? Okay, well, here you go. 1919. Here is 106.75. And we're at 107.13, 107.04. You're not going to make 100% on your money in a day. You're going to get a stake out of it, though. If you use all of this together, these are proven academically that they work together. Henning has an entire book on this issue. It's called Stocks by the Numbers. And I think it was written in 2009.